Looking for the perfect Facebook post but low on time? Check out Foremost on Facebook for posts that you can easily share on your own page. Foremost, for you. ForemostAgent.com.
As part of AIG, Lexington Insurance has been riding around the world for years. But Lexington President David Bresnahan says the landscape is changing as more clients seek policies that are local to the foreign locations where they do business. In this interview with Insurance Journal's Andy Simpson, Bresnahan discusses growth opportunities, including whether acquisitions make sense now.
So we've always been a part of AIG, which is a big global organization. But in terms of how we write our policies, we've always just written, when the clients needed it, global non-admitted contracts. So they have not included local policies in different countries around the world. It's just been sort of you're covered for all occurrences all over the world. Most of the time it required a U.S. or Canadian brought lawsuit. There were situations where we might indemnify the client, but the point is, in today's age and the changing landscape on international regulation, more and more countries are suggesting more and more often to our clients that they have a local admitted policy in Germany or Spain or Australia, wherever they may have some significant assets on the ground. So we've actually been developing for the past 18 months, we call it a passport product. So our ability to get AIG to issue on our behalf local contracts memorializing the architects and engineers professional coverage or the lawyers professional coverage or the product liability coverage, whatever the coverage is, property as well. We're getting better and better at facilitating the international policy issuance, and it's going to be a real competitive advantage for us because the issue is growing for our customers. The global opportunity is a big growth opportunity. Cyber is a big growth opportunity for us. We're investing a lot in cyber, just like many other carriers. When I think about the different pockets of casualty that are under the most duress, I think about New York construction. I think about railroad and trucking. I think about life science business, and national account umbrella business are all in the categories of difficult casualty, and so those areas should get rate increase, those areas should grow. Cat property will continue, I think, to have legs and be growing in 2013. And then on the professional lines side, our architects and engineers and our accountants business will probably need rate and will probably grow as a result. Yeah, we would certainly like to find a match, but it is increasingly difficult for us to find somebody to acquire. And as a general statement for the insurers, I think it's very difficult for insurers to get a comfort level with one another's balance sheets, how they reserve, and how the liability side of their balance sheet is actually arrived at. And so generally speaking, it's a challenge to understand the liability side of a client's balance sheet or a possible acquisition target's balance sheet. You combine that with the surplus in the industry is bountiful. So it's not as if you think you're going to buy somebody and anticipate a rapidly changing, hardening market. I think while pricing should continue to increase, it will be more of a prolonged, stable march towards rate increase. And then at whatever point people begin coming to the conclusion that the pricing level is at a good return, then they'll get into the market. There's a lot of supply side that's sitting on the sideline. So buying another company right now, unless it has a very obvious geographic or product advantage for you, I don't know why anyone would right now.